Hello there, this is Tejas from Trendline, and in this video, we'll look at the long-term strategy, management execution, and financials of chemical manufacturer Deepak Nitrite. This company is in the news lately because of a fire incident at its Nandesari unit in Gujarat. The chairman and managing director, Deepak Mehta, said this regarding the incident.
Deepak's own firefighting systems also help to contain the fire only at the godown level, and by and large, all the plants are really not affected. Deepak's own
In reaction to the fire incident, the stock actually fell over 4%. In fact, the stock is on a downtrend since it hit an all-time high of 3,020 rupees in October 2021. As of June 22, the stock is trading at around 1,750 rupees, which is a 58% fall from its all-time high and is just around 4% away from its 52-week low. So let's dive into understand what worked well for the company and also analyze the reason for the recent fall in its share price. We will start off with a brief intro of the chemical manufacturer, including its milestone timeline. We will then look at what segments Deepak Nitrite operates in and the products the company manufactures. Then comes the financial analysis of the company, where we will look at the financial health, both long-term and short-term. To give you a short overview on the outlook part, the company is investing about 1,600 crore rupees in expanding its capacity and also improving efficiencies. In addition, there is also the fluorination project, which will be commissioned in FY23. This project mainly focuses on the agrochemicals and pharmaceutical space. Maulik Mehta, CEO of Deepak Nitrite, believes that the company has a very strong degree of competency in these segments and is confident of achieving the planned internal financial targets. However, in the short term, with a spike in raw materials and prices of end products across segments moderating, the chemical manufacturer will need to rely on improving operational efficiencies and capacity expansion to counter the margin contraction. Coming to the company details and overview, Deepak Nitrite is a chemical manufacturing company that operates in the organic, inorganic, fine and specialty chemicals. It caters to a wide range of industries, including colorants, agrochemicals, pharmaceuticals, rubber, and more. Deepak Nitrite is not a young company. It was founded by 1970 by C.K. Mehta. IPO was conducted in 1971, even before the company started manufacturing, and was oversubscribed by 20 times. It commissioned a sodium nitrate and nitrite plant at Vadodara, Gujarat in 1971 and turned profitable in a short span of 2 years. In 2010, it forayed into the fuel additives business, and one of the major milestones was in 2015 when the company set up Deepak Phenolics Limited to manufacture phenol and acetone products. This was a big risk taken by the company as it was funded 40% through debt and the rest by qualified institutional buyers. The rationale was that it will be able to help substitute imports of these products and gain market share in India. As a significant portion of phenolics was imported, the management decided to make use of this opportunity. This was an inflection point for the company. Several years into the business, the risk paid off. The phenolics manufacturing plant reached 2,000 crore rupees revenue in 2020. Let's get a brief overview of what segments Deepak Nitrites operate in. Basic chemicals account for 18% of the total revenue and contribute to 17% of its EBITDA. This segment consists of standard products and products manufactured in bulk. Products are sodium nitrite, nitrotoluenes, fuel additives, and nitrosyl sulfuric acid. Deepak Nitrite has about 70% market share in sodium nitrate, and nitrotoluenes in India. These products are used by various industries, from petrochemicals to glass. The value drivers in these segments are cost leadership and large-scale production. As a result, the margins are relatively lower. Margin expansion is possible mainly through efficiency improvement and cost cutting. Given the market share leadership in this segment, the revenue growth opportunity is relatively lower compared to other segments. So new product innovations will be key going forward. Deepak Nitrite derived about 12% of its revenues in FY22 from the fine and specialty chemical segments. These include specialized products customized to client specification and are used in colors, pigments, paper, agrochemicals, pharma, etc. As this is a specialized area with limited competition, this segment boasts of higher margins. As a result, even though it constitutes 12% of the operating revenues, It contributed 26% to the EBITDA in FY22. Performance products include optical brightening agents, DASDA, which are used in paper, detergents, textiles, etc. This consists of 8% of the total operating revenues in FY22 and contributes about 3% of the EBITDA. However, in 2020, the price of end products in this segment soared due to supply chain disruption in China. Diversification away from China strategy is also helping Deepak Nitrite to capture market share. As a result, revenue from this segment jumped 90% year on year in FY20. However, the margins in these segments are volatile as it depends on the commodity prices, which have been erratic lately. The final segment that the company operates in is the phenolic segment. The management saw a big opportunity in this space and set up a manufacturing unit in 2015 to tap into import substitute opportunity. The phenolic segment contributed over 61% of the operating revenues in FY22. It includes phenol, acetone, and isopropyl alcohol. These products are used in laminate, plywood, pharmaceuticals, adhesives, sanitizers, and even in paints. It is important to note here that the margins in these segments are also heavily dependent on the prices of the commodities like phenol and acetone. Given that the plants are already operating with high utilization of more than 100% as a result of debottlenecking, the growth in this segment may not be very high. However, capacity expansion, cost cutting, and efficiency improvement will be key to improving margins. Let's now move on to the core strategy of Deepak Nitrite. This chemical manufacturer strategy going forward consists of 4 facets. The first is to expand capabilities to continue setting up new plants and expand the capacity of existing plants. Second is to enhance the margins by optimizing product mix and process optimization. Third, to achieve operational excellence through better capacity utilization. And finally, to widen the product portfolio by exploring integration opportunities and investing in new product innovations. In the Q4 FY22 earnings call, CFO Sanjay Upadhyay of Deepak Nitrite said that the margins can vary because of the volatile situation, but the main focus continues to be on the market share capture. The company plans to spend about 1,600 crore in capex in the next 12 to 20 months. This will be invested in Deepak Nitrite's agrochemical and pharma streams, and Deepak Phenolics phenol and acetone streams. Part of the capex will also go into improving efficiencies by reducing bottlenecks. Management plans to sustain margins by increasing capacity and improving efficiencies. Let's now dive into the financial performance over the years, both long-term and short-term. Indian chemical manufacturers got a big boost from import substitution and supply chain disruption in Chinese manufacturers. As a result, Indian manufacturers stepped in and made use of the opportunity. Deepak Nitrite also reaped benefits from this and is reflected in its financial performance. The 3-year revenue and net profit CAGR stand at 36% and 82% respectively in FY22. Its stock price grew at a 3-year CAGR of 84% as a result of both industry tailwinds and company's strategic foray into phenolics at the right time. In fact, the phenolics segment has been the star performer since its inception. Revenue from this segment rose from 196 rupees crore in FY18 to 4,291 rupees crore in FY22. In Q4 FY22, revenue rose across all segments, with phenolics segment's revenue rising by 20% year on year. Overall, the operating profit margin in FY22 stands at 23.4% as opposed to 11.8% in FY18. However, the margins fell in FY22 due to spike in raw material costs. The trendline forecaster estimates show that the consensus among analysts is of a single-digit growth of 7% year-on-year in FY23. In FY22, revenue rose 56% year-on-year, mainly driven by phenolics and basic chemical segment. Going forward, revenue growth is expected to moderate in these spaces. Margins are also expected to normalize on the back of high input costs. Any big swings in the commodity prices will continue to have a significant effect. Looking at the FY22 performance, though the company is posting healthy revenue growth, the operating profit margins fell. In Q4 FY22, revenue grew 28% year-on-year, but net profit fell 8% year-on-year. The margin fell 9.2 percentage points to 21.9%. The fall was due to high raw material costs and the normalization of prices of finished products across segments. Raw material costs rose 49% year-on-year in the Q4 FY22. And in the earnings call, Maulik Mehta, CEO of Deepak Nitrite, said that in FY21, prices of finished products were high and the raw material prices were abnormally low. He added that the costs have now normalized, but in many cases, raw materials are still at all-time highs. This is affecting margins to a great extent. Finally, let's get into the key drivers of growth. Going forward, one of the key risks is the price fluctuation in both raw materials and the end products. The raw material costs, which are at an all-time high, coupled with the normalization of end product prices, may keep the margins under constant pressure. The fluorination project, which is expected to be commissioned in the next 12 months, may also help drive the top line higher. However, with the presence of domestic players in this segment, Deepak Nitrite's competitive advantage remains to be seen. In addition, a competitive threat from petrochemical companies is also present, as they can vertically integrate to start the manufacturing of phenol and acetone. And finally, there is always the risk of the manufacturing plants catching fire. Recently, on June 2nd, 2022, its Nandesari manufacturing site caught fire, and the dousing of fire generated a large amount of wastewater. This meant the plant wasn't compliant with the environmental norms due to the usage of foam. As a result, the Gujarat Pollution Control Body ordered Deepak Nitrite to pay a rupees 1 crore fine and also ordered the plant's closure. This is not the first time this has happened. In 2017, there was a fire incident at its Roha plant. So this will continue to be one of the key risks for the company. So this was the company analysis of the chemical manufacturer Deepak Nitrite. You can find more information about this company or any other listed companies on trendlyne.com. This is Tejas signing off.